My name is Muathi Kilonzo, Managing Director at EFG Hermes, Kenya. So EFG Hermes is an investment bank. We set up the Kenya business almost 6 years ago, and here we help our clients invest and trade on the Nairobi Securities Exchange, and we are a leading broker. I initially started working in London at Morgan Stanley. In that business, I was doing all sorts of different things, selling structured products. I did M&A and eventually settled on Africa stockbroking. And from there, moved on to another broker, also in London, focusing on Africa and some of the Eastern European markets. But out of the Africa focus, this spun into what is now what we call frontier markets. And this is where my journey with EFG started. So frontier markets are markets such as Kenya, Nigeria, Pakistan, Sri Lanka, all the way to some parts of Latin America. So it's everything below emerging markets. So they are basically the exciting parts of the world to work, where there are always challenges, but also lots of exciting opportunities to explore. Look, I think the stock market here has probably evolved in the sense that institutional investors, and by that I mean asset managers, insurance companies, pension funds, really have become the key driver of this market. I think if you go back in time, you may have found that it might have been more retail driven or high net worth driven. Certainly, as the pensions have grown, then these have become a larger part of the market. And of course, foreigners are also in that category, because the foreign investors in this market are asset managers and pension funds from across the world that are looking to participate in Kenya. So I think that's been a key dynamic. Looking forward, I think one of the things that we would like to see is retail come back to the market, because retail is really quite important, because it gives you volatility. It gives you, retailers change their mind quickly and they come in and out of stocks quickly. And I think that's something you need, whereas an institutional investor is really investing for the long term and may have more of a buy and hold policy. But you need that sort of daily ebb and flow of a retail investor, putting some dynamic sort of vibes into the market. So I think that's a really important aspect. And I think for the market, all of us would like to see that develop. And I think the regulators are all very focused on having that come. And I think it's quite exciting also to see all these, I refer back to all the government savings plans that they've put in place for us. All of these should really increase savings, which is good for the market, because with increased savings means should be a larger pool of assets looking at the stock market as one of its avenues for investment, which long term should be good for this market. So we are hopeful. Look, Kenya is in a really interesting place. It's been a very tumultuous 18 to 24 months, really precipitated by the shortage of FX. But we now seem to be out of the woods. There's light at the end of the tunnel, and which is important, because this now positions us for a nice upturn in the market. And for the investor, the exciting thing is that Kenya has really never been cheaper. And you have to look through all the crises in the past. The Kenyan stock market is as cheap as it's ever been. Companies are still growing. You've seen the bank results. The banks are doing well. So there are opportunities to pick up banks at valuations that you've never really seen before. And if that's not what's of interest to you, if you're looking at dividend yields, there are also counters where dividend yields are in the double digits. So it's exciting for both the income sort of focused investor and also the value and focused investor. And I think also the other thing for local investors is that if you think about the last 24 months, what we saw was an exit of foreign investors who are a key part of the dynamic of this market. So if you're looking at that dynamic to turn and that tide to come back, then this is the time to actually get in front of those flows. And as Kenya becomes more normalized by some of the agencies such as MSCI, etc. So really, it's very, very exciting. It's risky, but I think the worst of it is over. The government seems to have made some very tough decisions. I think all our pay slips will demonstrate that there is a big focus on getting the fiscal situation in control, which, if it all works out, puts Kenya in a very good position. So if you're hopeful and you see some future, then it's a good time to get involved in the market. I think one of the best things to do is to read the newspaper. Every day, start reading a newspaper, read the news, see what's going on Twitter, see what's going on, whatever information sources. There's so much information available to you. But I think if you combine all those pieces of traditional and new media, you basically have a good sense of the conversation, because the market's really driven by sentiment. If you understand what people perceive the government is doing, what people perceive particular companies are doing, then I think you're somewhere very powerful. I think another thing is to also just look around, go to your supermarket, see what people are buying. If you see people buying lots of beer, and particular type of beer, maybe it's an EABL brand, or it could be the opposite. You could see people buying a competitor's beer, and then you form an opinion on whether you think you should buy EABL if they're buying EABL products, or sell EABL if you see a competitor growing. You can go and look around. Which bank do people like? What are people saying is a growing bank? Which bank has given you the best experience with their products? And I think that's a very, very powerful way of making decisions for both the amateur, the newbie, and the sophisticated investor, because ultimately it's all about what we think and perceptions that drives the market. And I think the other thing is to be just take a studious approach, take a long-term approach. Even if you're trading short-term, just think about your long-term goals, what you're trying to achieve, whether it's short-term gains, medium-term gains, long-term gains. Are you trying to save? Are you trying to speculate? Speculation is not a bad thing. I think in the market, we also need speculative activity, and we also need long-term investment activity. And I think what we've seen in betting and how quickly it's grown, that generally is a sign that people are quite willing to make speculative bets. So that's something that we should encourage in the market to come in. I like to cook. Actually, I find that really interesting, and I find it nice to disconnect and try new things, whether it's making ice cream or just experimenting. I think that's certainly something that I like to do. And I also like to invest and look at art. I think that's something that I find quite relaxing and also quite a bit like the stock market. It's about just digesting lots of information, making decisions, and sometimes you have to live with it. Maybe you like it or not, but I think it's exciting.